it's clear that the concept is, to all of us, we are all very clear about what the concept is. The question is implementing the concept. Frankly, we all say well, there are credit scores right out there, but I'm pretty sure if I asked the people in this room what their credit score is, and I'm sure not even half of us would know what our credit score is, and that includes the bankers. I think the point about the credit score being something that is part of your sort of like your weight, for instance. You know what your weight is. So this is something that requires a certain commitment, as the banks have now committed to doing certain things. I don't think as a customer, what I want to see is a new legal document that tells me that my interest rate will come down by 100 basis points. That is of no consequence to me. What is of consequence to me is actually seeing that, the materialization of that. So I think the point here is that why it is being brought out in this way, why we insisted on saying something in writing, is precisely because we want to have it monitorable. So yes, what is it that you are committing to? What are the banks committing to, and how are they, and how can we enhance it as time goes by? Nothing is static. So in that sense, if we don't know where we are starting from, we will fail. There's a lot of work that needs to be done here. We've identified the pressure points, as it were. And I think we've also mentioned that there are other things we need to do. I don't want to emphasize them here, but expanding the net, as it were, of information that populates the systems in the credit reference bureaus. So there is some work there, a lot to be done by ourselves and the credit bureaus themselves, but also a lot to be done by the banks in this regard. At the end of the day, they have to tell me that if your credit score is 520, what does that mean in terms of your risk, in terms of your interest rate or whatever? If it was at 600, what would it have been? If it was at 400, meaning you're really low, then what would it have been? So I think that's the consideration that we are trying to get at. And bankers need to answer that question too.
That just legislation alone would handle. It's things that we as an industry would commit ourselves to do. So KPMG's role really is to do an independent review of this, looking at what's best practice across certain markets, and then implement that here in Kenya.